Hello and welcome to this video on investing tips from Warren Buffett. Many people believe that Warren Buffett is one of the best investors in history. His investment strategies have made him one of the wealthiest people in the world and have also helped him achieve a remarkable track record of success. So, if you want to follow in his footsteps, here are a few tips to get you started. Focus on long-term investing. Warren Buffett is known for taking a long-term approach to investing. He believes in buying and holding on to quality companies for the long haul. This means that instead of constantly buying and selling stocks, he looks for companies with strong fundamental indicators such as consistent profits, a solid management team, and a competitive advantage within their industry. By holding onto these companies for the long term, he allows them to grow and potentially generate larger returns over time. This long-term approach is in contrast to short-term or day trading, which involves buying and selling stocks within a short period of time in an attempt to capitalize on small price movements. While this strategy may work for some investors, Warren Buffett believes that the long-term approach allows for a more stable and consistent return on investment. By focusing on the long term, you can also avoid getting caught up in the short-term fluctuations of the market and make more informed and rational investment decisions. Look for undervalued companies. One of Warren Buffett's key strategies is to look for companies that are undervalued by the market. This means finding companies that are trading at a lower price than their intrinsic value. To determine a company's intrinsic value, Warren Buffett looks at various factors such as its financials, competitive advantage, and growth potential. By buying these companies at a discount, you can potentially realize larger returns in the long run as the market eventually realizes the company's true value and the stock price rises. To find undervalued companies, Warren Buffett recommends looking for companies with a strong balance sheet, a consistent track record of profits, and a competitive advantage within their industry. He also advises against following popular trends or investing in companies with overvalued stock prices. By taking the time to do your own research and finding undervalued companies, you can potentially realize larger returns on your investments in the long term. Diversify your portfolio. Warren Buffett also advises investors to diversify their portfolio. This means not putting all of your eggs in one basket and instead spreading your investments across different sectors and industries. Diversification helps to mitigate the risks associated with investing in any one particular company. For example, if you have all of your money invested in one company and that company experiences financial difficulties, you could potentially lose a significant amount of your investment. By diversifying your portfolio, you can spread out the risk and potentially minimize the impact of any one particular investment. Warren Buffett recommends having a diverse portfolio that includes a mix of stocks, bonds, and cash. He also advises against trying to time the market and instead focusing on a long-term investment strategy. By diversifying your portfolio and staying patient, you can potentially achieve a more stable and consistent return on your investments over time. Do your own research. Warren Buffett is known for his extensive due diligence and research when it comes to investing. He advises investors to do their own research and not blindly follow the crowd or popular trends. This means taking the time to understand the company, its financials, and its competitive advantage. By conducting your own research, you can make more informed and rational investment decisions rather than relying on the opinions of others. To do your own research, Warren Buffett recommends looking at the company's financial statements, such as its balance sheet and income statement, to get a better understanding of its financial health. He also advises looking at the company's management team and their track record of success. In addition, it's important to understand the company's competitive advantage within its industry and how it stands up against its competitors. By doing your own research and thoroughly evaluating a company before investing, you can potentially make better investment decisions and achieve a better return on your investments. Stay patient. Finally, Warren Buffett advises investors to stay patient and not get caught up in the short-term fluctuations of the market. On the stock market, prices can fluctuate wildly and quickly. It's important to remember that investing is a long-term game and that short-term fluctuations should not be taken too seriously. By focusing on the long term and staying patient, you can potentially realize larger returns on your investments. Warren Buffett advises investors to have a long-term investment horizon and to not get too caught up in the daily fluctuations of the market. He believes that the key to investing success is to focus on the long term and to stay patient. By staying patient and not getting caught up in the short-term noise, you can potentially achieve a more stable and consistent return on your investments over time. So, there you have it, a few tips on how to follow in the footsteps of Warren Buffett. By focusing on long-term investing, looking for undervalued companies, diversifying your portfolio, doing your own research, and staying patient, you can potentially achieve similar success as one of the greatest investors of all time. Thank you for watching. We hope these tips have been helpful and that you can apply them to your own investing strategy. Happy investing!